Hi, this is Philip with Trade Genius, and welcome to the Trade Genius Super Histogram and Training video series, where we will break down the Trade Genius Super Histogram and show you how we trade it. So right now you see the Super Histogram. Everything that comes with it is plotted here on the chart, nothing else. So what we'll do is we'll start with breaking this down. What do each of these plots that you get on the chart mean? And then we'll go into different trading templates. Bob will show you his style of using it with his trading template, and I'll show you what I use and how it all comes together. So let's dive in. All right, now let's get into the different components of the super histogram indicator. And we'll start with the lower pane, and then we'll talk about the upper main chart window as this indicator plots in both spaces. So let's start with the lower indicator pane, where we have the super histogram and the trend change line first. And I'm going to turn off all the other plots except for the super histogram. And you can do this by double clicking on the super histogram, and it brings up the super histogram settings, and there's a style menu. And so you can change things like the way it plots different symbols. If you want to change the symbols later, you can also change colors in the inputs tab here. So if it doesn't work with how you run your chart colors or the background of your chart, you can change all of that from these menu items. But for now, we're just going to turn off all the different plots and just plot the histogram, and we'll show you what it's doing in relation to price. So the way I like to look at the super histogram is that it's basically showing you the direction of the trend. Okay, so green is we're trending higher, we're in a positive trend. So just simply looking at the histogram, you can see that basically it was telling you to stay long this entire stretch here. Now we're taking a look at the S&P 500 E-mini futures on a 3-minute time frame, which is my preferred time frame for looking at taking day trades when they set up on S&P 500 futures. And then conversely, when the histogram turns red, these are areas where you're looking for price to decline, trend to change down, and then you'd be looking for short trade setups. Okay, so the histogram, the best way to view the histogram is it's the direction of trend or the direction of price action. The other component to this is the levels in which the histogram plots. So you can have a maximum reading of 4 and a maximum reading of -4. Okay, so that's basically the strength of the trend. The other thing you'll notice is that the histogram will turn yellow at extremes. So when you get a reading of a +4 or a -4, the histogram bars will turn yellow. And that is telling you two things. One, if you're starting into a strong trend, expect that trend to continue. And you can see that here with multiple yellow bars, all right? Or what happens is you're in more of a ranging environment or two-way trading environment. And when you get that yellow bar, a lot of times what will happen is price will then retreat and pull back. Even though the trend stays the same, right? You still have green histograms all through here. Price will take a breather. Okay, so it really depends on the strength of the trend in terms of whether or not the histogram will stay yellow, or maybe the yellow indicates a pullback that's either tradable, or you're going to see another rotation, maybe back to negative histogram readings, right? It just really depends what's going on. Like here, you're more of a ranging environment. You get yellow, goes back to negative histogram. But here, the trend is strong enough where it doesn't really lose the histogram. So a histogram is just a measure of trend. When the trend starts to get extreme, and those extreme readings are printed with yellow, and it may indicate a pullback or that the trend is going really strong, as is the case back here, and you're really not going to see much in the way of pullbacks at all. So that's how the histogram relates to price. Now let's take a look at the trend change line. All right, so this is just the trend change line. I've gone ahead and turned off the histogram, and I'm just plotting the super histogram trend change line. And what I want to do here is just show you how it relates to price. Now, just like the histogram, you're going to get a reading of +4 all the way down to -4. Now, notice what happens when price is in an uptrend and you're going to get a +4 reading, right? This is not an area that you want to enter into the trade because you're getting at extremes of the current move. So if we're in an uptrend, the histogram is green, we're trying to buy a dip. So what we're looking for actually is a -4 reading. So the trend change line goes from a +4 down to a -4. And you'll notice that in an uptrend, when we get that -4 reading, right, with no other indicators on the chart, this is telling you that right in this area, this is an entry. And what happens in an uptrend, you go from a -4 to a +4. And so you capture this move that dipped down to 60.96 and it goes up to 61.04. So if you're day trading the ES, the S&P 500 futures, that's a pretty healthy move to capture. And so that's what we're looking for, is that we see an uptrend or a downtrend. We're looking for the extremes on the trend change line. So either if we're buying a dip, we want to see a -4, ultimately go up to a +4. Or on the reversal, if we're in a downtrend, then what we're looking for is an entry to go short, a positive trend change line reading, to go to an extreme negative trend change line reading. So here you can see a very textbook case of, we get that because we're in a downtrend. You see that positive reading, +4, and then it goes all the way down to a -4. So this is the beauty of the trend change line. It's going to zoom in on a more precise entry in terms of the histogram trend. So if the histogram is green, then we're looking for -4s to go to +4s, right? We're looking for those swings within that histogram trend. And if we're looking at a red histogram trend going down, then we're looking for a +4 to a -4. And that's how you use the trend change line to read price fluctuations in a primary trend. All right, in the next segment, we're going to turn back on the histogram so we can see how the trend change line reacts with the histogram readings and what I look for to get into an entry. All right, so here's the histogram turned back on, and now you can see how the trend change line rotates around the histogram readings. And so what I want to do is I want to show you guys what I look for with the histogram trend and the trend change line. So here we have that really strong histogram trend that we looked at earlier. We're zoomed in now, and you'll notice that while we're still with a green histogram trend, the trend change line is turning red, right? We're getting a -4 reading with a green histogram. So what that's doing is that's telling us that, hey, we got to pull back in a trend, and this is getting to be an ideal spot to go long. So if there was no other indicators, then this is a spot where I would look to get long on a -4 reading, just using the histogram and the trend change line. And then what happens is I'm going to look for a move back to +4. So this is going up, and sure enough, we get a +4 reading. And so basically you get an entry near 60.40, and your +4 entry hits around 60.48. So again, these are nice chunky moves during the day that you can day trade. And then we get back to a positive histogram extreme reading. And at this point, I'm not going to get into the details of trade management, but ultimately you're going to want to start looking for an exit at the +4, or potentially trailing your exit stops under these candle lows to complete that trade. So that's really up to you and how you want to do that. And when you are getting into these trades, like if that trade does set up, you obviously want to have a stop in place, because you don't want to just leave it open-ended in case the signal fails, right? Nothing's 100% in trading. So you do want to establish where you think the ideal stop location would be. For me, I would probably stick the stop under this low, because really when these work, they should just pretty much work right away. So as the trade starts to move up into the right direction, at some point here, I would probably move my stop to under that low. And then as we get up into this area, I can move my stop to break even. And then we get into the +4, and I can either exit there, or like I said earlier, you can trail a stop under these lows to try and see if you can catch a bigger move higher, and then let the trailing stop take you out of the trade. All right, so conversely, on the other side, if you have a trend down, right, we're getting a red histogram, actually some extreme readings here again, and then we pop up to a +4. So if I'm looking for an entry, right, then this is what I'm looking for on the setup. There is a +4 reading. Then that's telling me, okay, hey, this can snap back down to a -4 reading, which it does fairly quickly there. And that right there, again, for a day trade, you have a range of nearly 10 points that you can capture, like the meat of that move from these readings, going from a +4 to -4 in a negative histogram environment. And actually it sets up again here, +4, right? Even though the histogram is flat, you're still negative, because you're going from just negative to flat, but it's still a negative histogram reading. There's no positive histogram prints yet. So you can take that and that plays out back down to -4 again. Okay, so these are the types of setups that I look for. I call them either snap back up when it's a positive trend and we're looking for a negative reading higher, right? So we got the -4 and I'm looking for a move back up to +4. That's a snap back up. So that's what that looks like when we get that setup there. That's a snap back up. That's a snap back up. Okay, so positive histogram, -4. Negative histogram, +4, I call that a snap back down. All right. So basically think of it like a slingshot. If you're holding a slingshot, you pull the rubber band backwards, right? It's going to want to snap back from where you pulled it from. And that's exactly what's happening here. The histogram is like you holding the slingshot, and the trend change line is like the rubber band that will snap back to the primary trend, which is what the histogram is telling you. All right. So that is the setup I like to use, and it works out really well. And if the histogram is trending nicely green, as it is here, right, you have several bars green, you get that negative pullback, that sets up for a day trade that goes back to +4. And that's how I like to use the trend change line with the histogram. All right, in the next segment, we're going to shift our focus to the main chart window and take a look at the signals that the super histogram plots on the main chart itself. All right, so the next thing we're going to do is focus on the main chart area and take a look at the signals that are plotted on the main chart itself. So what I'm going to do is I'm going to go into the super histogram settings, and what we're going to do is we're going to turn on the bar coloring and then also the buy warning and sell warning. Now, when I turn on the buy warning, sell warning, you'll notice these dots appear. So the dots and the bar color are essentially together. What they're doing is they're letting you know that, hey, this particular bar is potentially setting up a change in the trend or a turning point in the move. So if we're trending higher and you see these appear, it's telling you that, hey, heads up, this trend might be running out of steam, and vice versa. On the downside, if you are trending down and you get the dot or the bar color change, then it's potentially signaling that that move is over and it's going to reverse higher. Now, the reason why we have a dot in addition to the bar color is because sometimes it's hard to see the bar color, right? So if I toggle the bar colors, right, you can't, sometimes it's just, especially when you're zoomed out, it's not readily visible as to whether or not we're getting a signal there. So that's why we introduced also the circles. All it is just helping you identify that, hey, that bar is potentially setting up for a reversal later. So that is your trigger bar. These trigger bars are simply the first step in a potential trend change, and they typically will come in after an extreme reading. Okay, so the bar itself is not a signal. Okay, that's not telling you that, okay, it's over right then and there. It's just a warning that either the trend is going to continue, which means it's really strong, it's going to run over that, or this potential area of exhaustion is actually going to play out to the other side. So that's just a heads up. That's all it is. The other component to this is the box. The boxes highlight the trigger bar area. So basically we have three plots that are part of the trigger bar. That is the candle coloring, the dot, and the boxes. The boxes are interesting because what they do is they highlight the range of the trigger bar. And more often than not, you're going to see that price reacts to that trigger bar range. And the reason is because the technicals are changing there. And so price is going to tend to react to that level. Now, the boxes only extend until the next trigger bar forms. So the previous box will terminate at the next trigger bar, and then that trigger bar will extend a new box out. That being said, sometimes if you take a look at the previous boxes, you'll notice price will stall out at those previous box areas. So just because the box terminates doesn't mean that that area, we ignore it. As you can see, sometimes it's still relevant. So pay attention to those. Even though they terminate, a lot of times they're still reactive. So these are really important bars. They may not kill the trend entirely, but they definitely do create a lot of reactions around them. The next thing we're going to turn on is the buy and sell signal. So this is where the trigger bar essentially gets confirmed. So again, because you get a trigger bar doesn't necessarily mean that that is an entry in and of itself, right? But when you get the arrows, now we're getting confirmation. And the reason why the arrows plot is simply because we're getting confirmation with price that it's starting to accept under the trigger bar in the case of a sell or over the trigger bar in case of a buy signal. These are counter trend signals, right? So they're going to come in when the system thinks there's a potential end of trend and the trend is going to turn. This is a decent sample of what works and what doesn't work, okay? So here you have a warning bar, right? The histogram is at extremes, and that's why you get a warning bar, because there could be potential exhaustion. You get the signal because the candles actually closed below the trigger bar here, right? And so you had a couple signals, and these will signal as long as the candles are closing back under. Okay, so if it comes from above and closes back under, you're going to get the arrow. If it takes too long, you won't get the arrows, and we've considered that setup probably expired, and maybe we're just running into chop at that point. But if it can happen within a reasonable amount of time, we will see these arrows print. And sometimes you'll get multiple arrows as price comes back above and then tries to get back under it again, which is the case here. So if you're looking for a counter trend move back down, these are valid entries. Now, obviously, this didn't roll over, right? It fought. So on these setups, typically what I would say is that if you get a close back above this initial swing high, the setup's probably invalidated. The other problem that you have with this not rolling over is the histogram never really went red, right? Never rolled over. So once you get these signals, you really do need to see the move start to work down. You need to see the histogram turn the color that you're expecting to get for this move to roll over. Like for example, here, trigger bar, we get the confirmation, right? We got two confirmations. And what do we end up getting? The histogram turns red. Okay, so that's what you want to see after you get these signals. So again, the trigger bar is not an entry in and of itself. You wait for the confirmation of the arrows. This helps prevent false positives, essentially, right? If you get the trigger bar, a lot of systems, this is the bar they'll say to enter, but we're actually waiting for more confirmation. And once we get that, then we say that's the entry to take. Again, to the buy side, you have extreme readings, right? Extreme trend down. And then we get the trigger bar. We're notified with the bar color and the circle. And then we start highlighting the range of the trigger bar. And then we get a close outside of the range of the trigger bar to the upside. So we get that buy arrow pointing up saying, let's get into that trade. And we ride that up. And here's an example of why you want to wait for those arrows, because as you can see, if you're taking the trigger bar without the arrow, what happens? You know, it's run over here, and it gets run over here, and it gets run over here. So that's why the arrows are more important. Now, we didn't end up getting an arrow because we did not get an arrow within the amount of bars that was required to get an arrow from the trigger bar. So you only have so many bars to get the move. If you don't get the move within a certain amount of bars, then we're not going to get the move back. We're not going to get an arrow. And basically it's because when you get these trigger bars, you essentially want to see the reversal happen right away. If a trend is going to reverse or snap back the other way, then you want that to happen rather quickly. If it doesn't, and it's just holding in this area, then that momentum is basically lost. So that's why we're looking for these things to turn down relatively quickly. And we only give it a certain size window from a trigger bar to actually plot those arrows. So those are the plots that the super histogram puts up into the upper window, into the upper chart area. And in the next segment here, we're going to talk about bringing this all together using the lower indicator portion with the main histogram plot and the trend change line, and using them in conjunction with these upper window plots on the main chart window, and how you can take better, more informed trade entries. Okay, so putting it all together, we have the lower indicator pane, which has our main histogram with the trend change line oscillating around it. And then we also have our trigger bars that start signaling after an extreme reading on the histogram and highlighting a trigger bar that could potentially confirm or start to confirm a change in the trend and a reversal. So what I'm looking for, if we're trending higher, for example, like here we have the trend is getting extreme, obviously, and now I have a snapback up condition, right? Because the histogram is green and we have a -4 reading on the trend change line. So it's like that slingshot, right? Pulling back, and we're looking for a move back up. Now, in the upper chart, I do have a warning saying that, hey, maybe the trend is starting to exhaust, but I don't have an arrow yet. So what we do know is that pretty strong trend, and we're getting a pullback. Potentially though, if we start breaking below the range of the trigger bar, we may not get that snap back up to complete. That's how you have to look at this situation as we come into it. But right as of right now, okay, you are getting a signal to get long. So even though you have a trigger bar saying, hey, potentially it's going to roll over, you still have a strong trend and you're getting a snap back up setup. So it's okay to still take that. And sure enough, price continues to go up. And that's why we say, don't take these just by themselves. You really need to see that arrow to confirm that, hey, the bears are actually here wanting to try to push this lower. And so that snap backed up work. Here's another situation where, again, we get to another extreme reading. Now, this is the second extreme reading. So what is this telling you? It's telling you that this trend is pretty strong, right? So here's another snapback up reading, right? And so again, until you see an arrow, they're valid to take, right? Even though you got a warning bar or a trigger bar there. So again, you can take it. And even though you still have another trigger bar or warning bar there, right? We still don't have an arrow. So if you're taking the trade, right, and you're trailing, you can trail up your stop or you can get out at a +4 reading, right? Those are all legitimate exit strategies when you take that snapback up dip, right? So we never actually, other than this bar here, right? You got the +4, which you could have got out there, or you could have tried to have trailed out, or you may have taken this other subsequent -4 entry. You'll notice we didn't quite get to a +4, right? But the trend continued higher. It just didn't get extreme enough to where you got a +4 reading on the trend change line. And so either you're going to get out at a +4 or you're going to trail up a stop. Or sometimes you may just have, for a day trade, you may have a predetermined target in points. That works as well. Those are all things in terms of trade management, which is outside the scope of this training video, but just going through how you would incorporate the different setups between what's plotting in the upper chart window and what's plotting down below with the histogram and the trend change line. All right, now let's take a look at a situation over here where we're trending up. We've got the warnings, right? Histogram got to an extreme reading, and then we got trigger bars came in right after it. And now we have an arrow. So because we have the arrow, if I get a -4 reading with a positive histogram, I am not going to take that trade for a snap back up. Okay, I'm not going to, it's not, to me, that's invalidated because now I've got arrows confirming that, hey, we are pushing back down enough that we're getting that confirmation that price action may be stalling out here, right? If you look back now, we've come up to this level and it's ranged and ranged and ranged. So potentially now we could be rolling over out of this range. So that negates, for me, that negates a snapback up entry, which technically we're getting here, right? The -4 trend change line, histogram trend condition is green, even though it's going flat here, it's still from a green condition. I'm not going to take that trade, okay, because of these arrows. It's going to keep me out of taking that snapback up trade. Now, does the snapback up work? In this situation, if I was to take that trade and my stop was here, I would have gotten stopped out, okay? Do we get a rotation still? Yes, we do, okay? And it actually goes back up, and from the -4 to the +4, ultimately at the end of the day, that particular setup did work. But I don't know that that's going to happen, right? I do not like fighting the arrows. So I'm just telling you that in this situation, if you do get a snap back up, I do not take it because of the arrows. If the arrows are not present, I'll go ahead and take it. Okay, even though there's a trigger bar and a warning bar, no arrows, I'll take the setup. All right, now let's take a look at the other side when we have a bearish trend condition, right? And we're getting buy arrows. So, you know, in this situation, again, if you look, now this is toward the end of the day. This is a regular trading hours chart. So you may not want to take a trade that's at the end of the day. If you're looking for a swing back up, might be not enough time for that to develop. But here we have basically at around 1 o'clock in the afternoon, we're getting a setup here. So again, the histogram is red, right? And we're getting In this situation, we'd be looking for a setup where we might get a snapback down. Now we got a trigger bar, but we also got the arrow. Okay, so again, I'm not going to take this short because I have an arrow. I'm just going to wait for a cleaner setup on that. In fact, this is your signal to actually go long the other way. Now, when you go long and you do have a +4 reading, you do have to reasonably expect that you may see price pull back down, right? Because typically price from a +4, this trend change line wants to get back down lower, right? Because it's like that rubber band effect. It may want to snap back down to the trend. So you just have to keep in mind too, that when you get the arrow, if you do have a +4, while you can go ahead and take that trade, just bear in mind, there might be a pullback after that entry bar. Okay. So in this case, there wasn't much of a pullback. You had to go through a couple. In reality, there's 6 minutes here, right? Because these are 3-minute bars. So 6 minutes before you got more move up in that trend. And that's because, you're at +4. So that can happen. Now, this moves up and we get a pullback, and you can see coming off of the +4 to the -4, but price has moved in your direction. So this is essentially what you want to see. You will get this situation where you get an entry signal, but the trend change line is at extremes. So while you can take that entry, just bear in mind that it may come back against you a little bit. This is more information for you. If you want to wait, you can maybe get in a couple points lower. That's a totally legitimate approach as well. And that's why we have all of these plots here to kind of give you an idea of how you want to handle the trade entry. Because again, as you know, if you're at an extreme on the trend change line, then we're expecting there's going to be probably some kind of pullback from these levels. So that's how you can use that on your entries. Here's another example too, where we come down again. We have negative histogram, right? At this point, we get a snapback down setup. We do have a trigger bar. The very next bar, we have a buy arrow. Okay, so to me, that negates the snapback down. So if I jumped into that trade just basically on that print there, then if I saw this trigger bar, I would actually get out of the trade, because to me, you have two opposing things going on here. So if that trigger bar didn't fire off, great. I'd still look for a short back down. But as soon as that trigger bar fires off long, well, technically now it's saying to get long the trade, right? And again, even though with a +4, it didn't snap back down, right? It just kept pressing higher, which is exactly what you'd want to see if you do take this entry here at a +4 reading. It basically just fought that and kept pushing higher and embedded that +4 reading. So that's why I don't take those snapbacks when we get the opposing arrow, right? The opposing arrow basically says, hey, we're looking for longs now. And so that's how I use everything together to kind of formulate my decision-making process. If we're in a situation, no trigger bars and a red histogram, right? What are we getting? We're getting snapback downs, right? That's a snapback down condition. That's a snapback down condition. But we start getting into where you get a snapback down, but now we got a trigger bar, and then you have the buy arrow. Well, that negates that, right? And now actually we want to be looking to take the trade the other way. So that is how you would use the lower indicators, the trigger bars, the actual buy or sell signals to take an informed trade decision. But this works on any instrument, works on any time frame. You can also look at higher time frames, what they're doing. And if you want to take a trade only in the direction of the higher time frame, so let's say, for example, if I'm trading on the 3-minute and I want to only trade on the direction of what the 15-minute is telling me, then if the 15-minute is green, I only want to buy on the 3-minute, because the higher time frame trend on the 15-minute is what I want to be trading with, right? Because the higher time frames are more powerful. So these are different concepts that you can apply to the histogram tool, the super histogram tool, but it's very powerful. The ranges that are plotted, the trigger bar ranges are very powerful. And I think that over time, you're going to find this tool to be extremely useful and pretty accurate compared to other tools that are out there. So I hope you find this helpful. As always, if you have any questions, you can reach out to us with tech support, or if you're in our Discord rooms with us, go ahead and ask questions there. We'll be more than happy to answer those questions for you. Thanks for watching, guys. In the next video in this series, Bob will share his trade template. I will share my trade template, and we'll talk more about those setups in those videos. Thanks for watching, guys. Take care.